In today's golden age of meme stocks, non-fungible tokens, and other promiscuous superficiality, arguments of growth stocks versus value stocks seems to be so 1985. So what if we just skipped that and went straight, fast and furious, pedal to the metal with a growth stock versus growth stock shootout? Long live redundancy! You asked for it, and that's what you're going to get on ETF Battles. It's the NASDAQ 100 ETF, QQQ, facing off against the Vanguard Large Cap Growth ETF, also known as VUG. Find out who wins right after this. Welcome to ETF Battles. I'm Ron DeLegge, and if you're here for the first time, be sure to hit that subscribe button along with the like button if you've been enjoying our content. And if you'd like to see a certain ETF battle, post your ticker symbols in the comment section below or on our Twitter feed at ETF Guide. If your ETF battle, by the way, gets picked, we'll send you an ETF Battles shirt or a coffee mug, your choice. Also, be sure to visit the description section below this video. We've got lots of viewer resources like free ETF guides, online classes, and ebooks. Growth stocks are companies whose earnings and share prices anticipated to increase at a faster rate versus the broader stock market. Now, compared to other types of equities, growth stocks generally have higher price to earnings ratios and a lower dividend yield or no dividend at all. In today's ETF battle is focused on growth stocks. We've got QQQ versus VUG. And this was requested by a viewer by the name of Andy Tan. So Andy, thank you very much for giving us this battle. It's Vanguard versus Invesco. Judging today's contest is Dave Kreinces, the founder at ETF Portfolio Management, and Dan Weiskopf, a portfolio manager at Toroso Investments. Dan is also the lead ETF strategist for the ETF think tank. It's Dan's first time on the show, so a warm welcome to you, Dan. Great to see you with us.
Thank you, Ron. Thrilled to be here.
Hey, guys. Nice to see you both. And Dan, welcome to ETF Battles.
Thanks, Dave.
So we got our 4 battle categories: cost, exposure, strategy, performance, and then we got our mystery battle category. That's where our judges can pick that single factor or multiple factors that they think are important to today's showdown. And they can also introduce wild cards. And of course, at the end of the show, we'll declare an overall battle winner. The program may also end in a split decision. We'll just have to wait and see. So let's get started with the first category, which is cost. And Dave, get us started.
Well, QQQ versus VUG is an interesting aggressive growth battle. But in today's leveraged ETF, cryptocurrency, and metaverse world, it does look old-fashioned, but we've got wild cards, so let's do it. On cost, you have the Qs at 20 basis points and VUG at just 4 basis points. Now, 4 is less than 20, so VUG is cheaper, but you do get better exposure to technology in the NASDAQ 100. So on a value-adjusted basis, I give the win on cost to the slightly more expensive QQQ.
Thank you, Dave. Got you down for QQQ. We shift next to Dan. How do you see it in terms of cost between these two ETFs?
Wow, Dave, I'm just shocked by that conclusion because 4 is less than 20 last time I checked. And then you got the sec lending part too. I would argue that Vanguard VUG, well, it might be free. Free is better than 20.
So we've got you down for VUG on cost. We move next to exposure strategy. So Dan, you're still up. Break it down for us. Which of these two ETFs wins when it comes to exposure strategy?
Well, let's see. The Qs have a lot of concentration risk, meaning that, well, they're really 55% in the top 10 holdings, right? The other one has about 46% in their top 10 holdings. Well, now the question becomes, are the top 10 holdings in the Qs going to keep on growing and becoming even bigger trillion-dollar companies? It's a law of large numbers for me, right? So I have to say I tilt again towards VUG just from a diversification strategy perspective and law of large numbers.
Thank you, Dan. We shift next to Dave. How do you see it in terms of exposure strategy?
These ETFs do have similar holdings, and the Qs give you extra exposure to top growth companies, including Tesla and Nvidia, which I like. And with aggressive growth securities, always go slowly and know your risk limit. But that said, overall, it appears to me that the process for the NASDAQ 100 is more dynamic in managing exposure to technology. So I give the strategy win to QQQ.
We shift next to performance, and this is where it really gets interesting. Both of these ETFs have a decent performance history. So let's begin with you, Dave. You're still up. In terms of performance, how do you see it?
Well, performance is the bottom line. And this year, these ETFs are almost identical in return. But over the past decade, the Qs gave you 6.5 times your money, while VUG delivered less than 5 times. In full disclosure, we do have positions in the NASDAQ 100 for our clients, and we believe the future of investing is in top leveraged ETFs and cryptocurrencies. Over the past decade, the NASDAQ 100 3 times, symbol TQQQ, also known as the American Dream ETF, it delivered a shocking 103 times your money. Let that sink in. TQQQ delivered almost 38 times the S&P. And the Bitcoin and Ethereum trusts are performing even better. Over the past 1.8 years, the Ethereum trust gave you 14 times your money, which was 33 times the S&P return. So I give the aggressive growth performance win to the revolutionary wildcard securities, ETHE, GBTC, TQQQ, and SPXL. But go slowly, they move fast. And in their absence here, I give the performance win to QQQ.
Very good. Thank you very much, Dave. And I have to admit, I have trouble keeping up with your wild cards. My scorecard always gets filled up with Dave's wild cards. Dan, you're up next. In terms of performance, how do you see it between these two ETFs?
Yeah, I think I'm going to give a little bit more of a focused answer. So forgive me on that, but I loved your answer as well. So, when I compare the two, I'm looking at it from what exactly is the factor, right? The QQQs, well, it's like a marketing factor, which to me is a little bit confusing. So what's the quality for the Qs? It's the top 100 companies that are listed on the NASDAQ. I hope they grow, right? And they probably will. Don't get me wrong. But having said that, that's the factor that drives the momentum in the Qs. For me, I'll also say that VUG is really a growth process. So again, I got to tilt towards VUG as my choice, and the mystery factor is.
So we haven't gotten to mystery. We haven't gotten to mystery yet. That's the next category.
That's the next category. Okay, I'll hold back.
Yeah. So on performance, you're going to give it to VUG, and those are some good points too, because VUG obviously has a broader approach. It doesn't just take stocks from the NASDAQ, right? It includes stocks from the NASDAQ, but also other exchanges. So now we're going to move to the mystery battle category. This is where our judges can pick that single factor or multiple factors that they feel are important to today's showdown. So Dan, what is your battle, or what is your mystery battle category? What is it and who wins it?
Well, I kind of gave it away, I guess, a little bit. From a process standpoint, to qualify for the NASDAQ, for the Qs, you have to be in the NASDAQ, right? It's the top 100 companies. And for me, that's just not enough of a reason. So my mystery category is exactly what the factor is that's driving the holdings.
And what is that factor?
Marketing by the NASDAQ.
And you don't like that?
Listen, there's 6 of them. If you look at that, in the ETF think tank, we have a singular category called marketing. There are 6 ETFs in there. That's very limiting for me. I would rather have a broader perspective.
So I've got you down for VUG for your mystery battle category. Thank you, Dan. Dave, you're up next. What is your mystery battle category? Surprise us. And what is it and who wins it?
Ron, the most important mystery category, in my opinion, is obviously position size. Over the past decade, many advisors told people not to invest in leveraged ETFs and cryptocurrencies. However, just a small 1% allocation to these securities would have made a huge difference. So clearly, having the right position size is critical. And I give the aggressive growth position size win to wildcards ETHE and TQQQ. And in their absence, I'll give the position size win to the unleveraged Triple Q.
Very good. Thank you very much, Dave. I appreciate that. Now we're going to move to the part of the show where our judges get their final opportunity to weigh in with their overall battle winner, and they're going to make some persuasive arguments. At least that's what they're supposed to do. So, Dave, you're up. Persuade us. I mean, you already gave us some incredible numbers, so that's pretty persuasive in itself, but it's your dime, your dance floor. Go ahead.
So to recap this old-fashioned aggressive growth battle, our core equity diversification is mainly in the NASDAQ 100 and the S&P 500, both with and without leverage, because they are top portfolio management machines per their performance. And remember, as far as cryptocurrencies go, Bitcoin just set a historic record, reaching a 1 trillion market cap in 12 years, and Ether is on track to get there soon in just 6 to 7 years. So it's hard for people to appreciate that Ether is the fastest growing large cap asset the world has ever seen by far. So for aggressive growth exposure, I favor the revolutionary wildcard securities, ETHE, GBTC, TQQQ, and SPXL. Although some investors will prefer to own crypto through ETFs or directly through crypto exchanges. But in the absence of these wildcards, I give the aggressive growth win here to QQQ.
Thank you, Dave. We shift next to Dan for his final opportunity to weigh in with your overall winner. Give it to us.
Okay, so in the ETF think tank, we're big believers in innovation. And while I agree with you that the QQQs has really been a wonderful ETF over the history of the fund, I have to say, here's the wild card to me. There are about 300 ETFs that are thematic. And for me, when I'm allocating to growth, I want to choose an ETF that represents my views as an individual or as a financial advisor. So we're very big believers in thematic ETFs. And given the number of choices, well, you know what? I still will lean to VUG over Qs, but I just like to relate to what I own. And so choosing the right theme that makes sense to me as an advisor is my answer.
Very good. So thank you very much, Dan, for weighing in. And according to my battle scorecard, this is going to end in a split decision. And so guilty as charged, right? Ron, split decision, DeLegge. And this was pretty much opposite. This is like that TV show, The Odd Couple, where everything was the exact opposite. But there is some synergy in terms of what you're kind of saying in terms of thematic investing, because in a sense, you know, some of the themes that Dave has talked about many times on the show, like AI, robotics, and the whole movement of electric vehicles and cryptocurrencies, those in a sense are themes, right? And the question is, though, you know, how are you getting your exposure to those specific themes? And he preferred in this instance, in this battle, the triple Qs over VUG. And of course, Dan making his argument saying, listen, NASDAQ is a great marketing machine, but at the end of the day, if I'm looking for a growth equity play, I want something that's broader. And in that case, he chose VUG, VUG, over the triple Qs. Great job, judges, to both of you for helping us sort through today's high-stakes growth ETF battle. We appreciate your insights.
Thanks, Ron. Thanks, Dave. It was fun.
Thanks, guys, and happy investing, everyone.
Well, which ETF battle would you like to see in our next episode? Post your thoughts in our YouTube comment section below. Give us your ticker symbols. If we choose your ETF battle, you'll win a shirt or a coffee mug. You can also hit us up on Twitter at ETF Guide. Be sure to hashtag ETF Battles. Thanks for watching. I'm Ron DeLegge. We'll see you next time.